Hey guys, it's Will. Hopefully, you're having a great day today. In this one, we're going to be going over some of the top data center companies. And in this instance, we want to talk about APLD. We saw new data centers breaking ground over the last quarter. We saw new big tech companies that are investing back into data centers. Some companies that are lagging in the data center market that you might want to stay away from. And we're also going to talk about what we're doing currently in the markets to capitalize on this boom that we're in AI. And once again, watch out for some of the potential pitfalls we're seeing in the policies and in the constructions of these data centers that have been causing some red tape and some lagging in the market. So we're going to jump into it. I think we're about 8 minutes late here on the live stream, so apologies if you started tuning in earlier and you're waiting for the live stream. Um, had some things going on with Prophecy AI. We had record usage on it, and that's been really cool. But it also comes with figuring out our billing actually related to all of the projections that we're having right now with Prophecy. So Prophecy AI is our AI driven technology that allows you to select the top AI models in the world, from Grok to OpenAI to Claude to Gemini, and utilize our three-step process. I have a three-step analysis that goes over the market, the analysis of the technicals, the financials, and the news. And it goes through those uh, sections along with the risk to reward. And each one of those is broken down to many different steps. But we essentially automated it, plugged it into some of the top AI models in the world. We're getting projections, and very excited to announce that we have some new data that we're coming out with. It's allowing us to see which models are the highest performing models that our users are using, which is very exciting as we use AI to streamline the process. So if that's you, you want to tune on in with Prophecy AI. We just did a full breakdown of how to use this system. Let me go ahead and drop the link here. Here's the link. And I'll go ahead and drop it in the chat for you if you guys haven't had a chance to go get the full scoop on it. If you're trying to use AI and you don't want to get behind in how to use the tools, and you might say, okay, I really want to make sure that I'm not missing some of the movements in AI. Not only is this data center market big, which we're jumping into here, let's get into it, APLD, but we're also seeing a massive change in the amount of AI impact in things like analysis. In fact, it's coming right now. It is here to where we're seeing AI become more efficient than most analysts and being used by institutions. And as institutions are using it, that's why we built it for you as well. And so let me go ahead in the chat. I'll drop it in here in inside of the chat. Here we are. Or you could visit the first link below, but I just sent it. If you guys missed that full breakdown of how to use AI, it's in the live chat there for you. Lee, good evening. Jay Zev, how are you doing today? Is there a mega snowstorm? I haven't been affected, but I've heard. Is there any calmness yet, or are we still in the crazy storm right now? Uh, in I heard there was something going on. And was it Texas, or was it just across the whole uh, east side of the United States, or what? I didn't really see that news, or I saw the news, but yeah, crazy storms. It's definitely cold at night here, but I'm over in California. It's a little more mild, you could say. Good evening, Judy. How are you doing here? You got Judy and Lee. So Judy Chang and Lee Chang, husband and wife tuned in. I love it. Elvis, could you please take a look at CoreWeave? Do you see a big move incoming? Because I believe so. Here's the thing with CoreWeave. CoreWeave is a stock that is actually uh, pretty highly tied with APLD, right? So APLD is going to be one of the stocks that we're going to go over right now. So APLD, you can see some of the projections as high as 4% gains month over month in the projections from Grok in this case. The interesting part is, if we were to kind of take a step back, look at the trends, CoreWeave here, recommended by Elvis, is one of the top customers of APLD. So it's actually perfect that you say that, Elvis. So if you take a look at CoreWeave, you see since their IPO that took place back here in March, they did become a little premiumly priced. We saw them jump up to that $187 price point. And in that case, they were overextended. We saw them sell down, and they have sold down because, once again, IPOs, you all know, you've probably seen this, IPOs oftentimes have a lot more hype, right? So when it comes to CoreWeave, they definitely saw a lot of hype right after their IPO, but now they're kind of stabilizing out. And we're going to get into their partnerships. So if you look at CoreWeave, CRWV stock, take a look at their financials. They're a $46 billion company, so they're up there. They're no longer a small cap company. And you can see this is their income statement, financials. Just go into Google, right? Nothing fancy, just the revenue. We're not doing any crazy technical analysis here. I'm just showing you the incomes from the company. They've been ramping up their revenues. From 2024, they were at 580 million. They jumped up to $1.4 billion in the last quarter with narrowed net income. So revenues jumping, in that case, 133%, but year over year to 2024, up 700%. You see this ramp here of revenue. So revenue is increasing. The balance sheet has looked just as strong. You see their total assets, once again, nothing fancy here, just their blue pillar representing their assets and the orange pillar representing their liabilities. You can see that they're really growing, okay, all the way up to from what was 14 billion to now 32 billion dollars in assets. Again, about 3 billion in equity. So the thing is the reason that they might not be trading as high as some might expect is because the revenue is there at 1.3 billion. That's amazing. That's really good. 1.3 billion. But they're spending about 1.4 billion. As you could tell, their net income is still negative. So there's one thing. They're not turning a profit. They had a positive net income, which they have come close. Then you could see them really hold that 50 to even $100 billion market cap. I think about it. They're making 1 billion, but they're just losing money still. The other reason why they're not trading at higher levels and why they've kind of pulled back recently is because if you look at their total assets, while they're at 32 billion, against impressive numbers, these are very nice numbers for a new company, their total liabilities are at 29 billion. So that means that they actually only have, you can see here in total equity, about 3.8 billion, which indicates that they don't actually have, 3.8 billion in equity, negative net income of 100 million. Okay, so they got about 3 years of runway at their current level. It means they're actually losing some money, right? They got to continue to ramp up. But they're ramping up in an industry that's growing extremely fast, which is AI. So as they ramp up, they're okay with having more liabilities. They're okay with having more debt because they're expecting more payoffs, and they're aggressively spending to build data centers. And that allows for them to put in GPUs, put in compute, and then rent out the data centers for the AIs that companies are happily paying for because of how valuable they're proving to be. A good example would be Prophecy AI. We're paying, as I mentioned, just out of meeting today, we're paying premiums because why? Other people could go. There's some that pay $300 a month for Grok, $200 a month for OpenAI. Claude is what is it? 200 a month for Claude Max. Gemini is sound like I was saying Jeremiah. Gemini is 249 a month, right? So, why are they so expensive? It's because, those AIs are really, really good, right? And so that's why we've actually taken all the models, we put them into Prophecy here, but and we take the premium models. So rather than someone paying $1,000 a month to go get all these models, we actually consolidate them and then specialize them for the financial projections. Now that's worked really well for us, but as I mentioned, we're paying quite a bit in AI usage, which is totally fine. We have customers that also pay because they're getting more value than what it costs, and they're using it to invest and use projections to essentially get AI analysis, save a bunch of time, and not be guessing and have overall directions kind of mapped out pretty well for where things are kind of going. And so there's value, but nevertheless, it requires spending. So in this case, in CoreWeave's deal, spending a lot of money, that's why they're currently still a little bit on the premium at 46 billion. I know that's crazy to say when they made 1 billion last quarter, but the negative net income is what's dragging them down, and the only 3 billion in equity is also kind of dragging them down. So that's why, you look at the last month, they're 17%, but 6 months they've kind of gone sideways. They're down about 22% because of this. And so CoreWeave, they're gearing up for something bigger. In fact, if you look at some of the deals, so that's where we're at in the fundamentals. On the technicals, I don't really have much for you. I could say that they have IPO'd recently, so that's hard to tell. You got a resistance kind of trend, a downtrend even like this, but potentially breaking out, right? They got a support level here, a support that they might break above here. That could be a breakout there, and then maybe in that breakout they reach this other level of resistance, which is right up here, and then you're looking at a potential swing, back up between these levels up into this level here of around 45% potential gain on CoreWeave. That's really good. But again, they got that resistance level. It's kind of getting rejected a little bit. So if they break above $100, then that would be a level to watch. This previous resistance, the previous resistance they're facing now at 100, that then acts as a support. And then you can kind of use that as validation, use it as a support from a technical perspective. But from a financial perspective, they're slightly lagging. But in the next 18 months to year to you're probably looking 18 months to 3 years, CoreWeave looks quite good. And the reason why is because if you look at APLD, for example, so APLD, this is what the video is really about. I just want to answer Elvis's question there on APL or on CoreWeave, and it goes nicely into APLD, right? And Tony's here. What's up, Tony? How are you doing? Cheers, brother. Hey, man. How are you doing? Doing well, Steve? Good to see you guys. Robert, hey. From Texas to New England is the snowstorm. All right. 22 states, 18 inches of snow until Tuesday. Wow. Wow. Yeah, I remember when we had crazy storms. One time it was like 15 or 20 feet over near Tahoe. So I live in between Sacramento and Tahoe, and sometimes when that happens, it shuts off the grid. Like power lines go down, trees fall on houses cave. It's pretty crazy. So I hope everyone's safe. Everything's good. JZF says BITF. Love it, man. We take a look there in a second. We'll wrap APLD here. Steve says, is APLD good long-term hold? Good question. In my personal portfolio right now, I hold APLD for the long term. And at this point in my investing portfolio, it's treated us very well. It's gone from $3 a share to now $34 a share, or $37 a share, excuse me. So, I think there's a lot to run for APLD, but we'll get into it. Long term, I do hold it personally. It's not a recommendation, but I'll go over some of the facts why, and then you can make your own decision. First live chat. Hello, Will. Hey, what's going on, Jamin? How are you doing, Jimmy? Good to see you here, man. What do you think of DTCR and ETF with one trade gives exposure to lots of data centers? Yeah, I think any data center, quantum, space tech, defense, drone, AI type index funds are probably a pretty good bet. The only thing they're great bets in the long term. I would just kind of watch out for the fees. That's all I would really watch for. But yeah, generally speaking, you can vet some of the ETFs, their holdings. But yeah, generally it's pretty good. Lee says, hey, Will, when you get a chance, would you please also take a look at Redwire? It went up and dropped on Friday. What happened? Double down. Okay. Yeah, we take a look at Redwire. It's been good to meet. When I met with Redwire, and they were at $3 or $4 to $5 a share, And when I first met with them and I got to talk with their, I think it was their CFO, they were trading at a fraction of their total assets. Their assets were at 1.1 billion, and they were trading at like 550 million. So, generally speaking, when a company has equity, it wasn't just assets, equity of over a billion, but they're trading at 550. Just according to Benjamin Graham, at least, this is what you see in the stock market. That's kind of the definition of, you're seeing an undervalued company. And then they got some partnerships that have been pretty large in the NASA contracts as well with Redwire. So I really like them long term, and I hold them long term. But we can go over some of the short term for Redwire as well. Lee, is that what you're doing? Are you doubling down short term? Are you medium term? Let me know, man. What's that looking like? USA, I love you too, man. Appreciate you. Thank you for videos and your wisdom. Of course, man. Here for you. I think primarily some of the best wisdom, people are like, how do you know that about that stock, Will? That's crazy. I'm like, because Robert said it, or because Timmy said it, and we verified it. But also, if you want really good quality info, just go directly to the source. Go directly to the company rather than going to what all the hot news articles are swaying people to do. All right. Hydrograph, clean power, got it. Holding APLD. All right, let's jump into APLD. So APLD stock has been at a $37 price point, consolidating from left to right over the last 2 weeks. You can see that they did have a temporary run up that we caught on Friday. We traded APLX. We caught this entire move and bought at 33 and sold at 38. Now they're at 37. But if you look, they've been consolidating from left to right since January 8th. So midterm here from left to right here since January 8th. Last we projected them, we were looking for that 11% gain. We ended up catching that over on APLD X or APLX, which was a 2X of the stock. Now, why did we go for that? Well, a couple of reasons. Really strong support level here at $33, $35, right around here. They are getting rejected at this $38 price point. You see them selling down. And next level of support level to watch here is going to be right here, around this EMA, around this consolidation here. If they're going to keep at least like this, just technicals alone, you're looking at this level here. You got a resistance, support, kind of consolidation through here. And then maybe if that trend stays true that they're in right now, they find support or at least hold above this $35 price point. Now, if they drop back below 35, we may end up looking to trade them again and buy around 32. But I don't have any short-term positions because right now, if you look at the RSI and look at the MACD, they look very overbought. Look like they're selling down. So the short-term is patience. If they break out above 38, excellent. Maybe we trade them from 38 to 40. We have done that as well. But if they sell back down further, just kind of a patient game on the short term. Not any things I would be attracted to because they're kind of overbought after Thursday, Friday. Now APLD, if you look at the overall trend, okay, let's delete some of this stuff. All right, overall trend from $3 a share to these levels. There we are. You can see they've been on this trend, very consistent. They're now up into this resistance level here. All right, it's previous resistance around $40 a share. And so it's possible while they're still materializing a very, very conservative approach for APLD that would also probably require some macro negative stuff. Let's say new tariffs get introduced or things actually stayed fairly stable with the World Economic Forum. But let's say that, literally something happens. China moves in on Greenland and something of tension starts to, I don't know, whatever it could be. It could be a macro announcement related to, the Suez Canal, something, whatever it is. Barring any serious levels, we're actually looking to break out above 35 and shooting up and pricing in above $35 a share for APLD. Yeah, I know. You'd say, what, Will? That doesn't make any sense. Look at it. It's at a resistance level. It's probably going to sell back down here. We'll talk about the fundamentals here. And I really want to get into the fundamentals because that will kind of make more sense. But a really conservative, let's get back to the really, really conservative approach, would be that that type of news, negative macro news, possibly related to data centers or energy, causes the market to correct and APLD loses momentum. They may say sell down as low as 25. So any short-term trades, short-term swing trades, short-term day-to-day trades, if you want to have that vigilance to know they could potentially sell down to this $25 price point. That's a 30% sell down. We've seen it 2 times in the last 3 months where they've done this exact move, where they've kept their overall trend, but they've sold down about 30%. So just watch out. Don't trade anything here without having clear risk management on a short-term trade at least. Now, let's get into the long-term and why we hold them long-term, and also what they're working with CoreWeave about. So if you go into Applied Digital, you'll notice they just came out with record earnings. In fact, they jumped up to $126 million in revenue. That's a huge jump from where they just were, because they were literally holding 136 million for the entire year. And then they came out in the last quarter and did 126 million in 1 quarter. So they're basically doing 4 times the revenue that they were doing compared to 2024. Then you had the balance sheet come out and they increased their assets to 5 billion. And just a little bit ago, they were around 250 million in assets. So they've literally jumped to 5 billion, 5.2 billion in assets. So they're ramping up for some really big stuff. And where does CoreWeave come into this? Well, they're currently at a market cap of 10 billion, but their pipeline has been breaking ground. Look at this stock market. Applied Digital jumps after breaking ground on a new AI factory. I'm not going to spend too much time on this because it's a third-party article. We'll get straight to the source, but let's see if they do get straight to the point. They do not. So let's go to the source here. The press releases. They've recently signed about $15 billion in deals, 11 billion of which is attributed to data centers being built with CoreWeave. So CoreWeave is spending a large portion of their expenses. That's why they're losing 100 million a quarter, because they're spending a billion and they're making a billion. So, or 1.1 is what they're spending and they're making a billion. And so part of that $1 billion a quarter that they're spending, 1.1 billion, is going towards companies like APLD. So APLD builds the data centers for these companies like CoreWeave. And they have this new Delta Forge. This was just announced on Thursday. Delta Forge 1 designed to initially support 430 megawatts of total utility power across 2 buildings, with the ability to scale considerably over time through Applied Digital's disciplined, repeatable approach. Now, they do have a really nice approach. They really broke it down with their AI, cloud networking, blockchain. In this case, they're not talking about necessarily which company they're working on here with this data center, but it's a large contract here with this AI factory. This could be potentially huge. And so we know already they got about $15-16 billion in contracts that started to show up on the balance sheet. But once again, let me get back to that. But, right, we're looking at why they're getting good is because they just talked about on their earnings call that just came out when they beat their earnings, is that they are figuring out very fast ways to build data centers because they're building a lot of them. And they're figuring out how to efficiently make the data centers run so that now companies like NVIDIA are investing in the company because they're saying, wow, they're doing a pretty good job. And so while we're about to see a big snowstorm, It's already here, right? Big snowstorms can affect these things. So I'm not going to say it's going to show up on Monday, but when, for example, CoreWeave, they had a big dip. Part of why they dipped down was because they were building a data center over in Austin, Texas, and they had a large rainfall or flooding that made it virtually impossible to build for like 90 days. And they had to push their timeline on these data centers 90 days. During that time, Applied Digital continually built and was able to continue to build these data centers over in North Dakota. Okay, so they're building data centers in North Dakota with NVIDIA, Dell, Intel, Hewlett Packard Enterprises, and Supermicro Computer making up the infrastructure of these data centers. And on top of that, not only were they able to get advantage, but now that they've had that advantage, it's showing up on the balance sheet, and you see some investors jump in. So according to Prophecy AI, let's jump into the insiders. Oh, so why I was bringing that up is because when it comes to this snowstorm, watch out because it might actually impact some of the schedule on when data center companies uh, were originally scheduled to have those up and running, the AI factories, and may be delayed because of the snowstorms. So when you look at the Applied Digital analysis here on some of the insider selling and buying, you can see that NVIDIA has been buying. You got State Street, Goldman Sachs, Citadel, Morgan Stanley, and Vanguard and BlackRock all purchasing shares of APLD. The insider trading has been a little interesting. We saw the CEO actually sell a pretty large share. He sold about 165,000 shares, um, and that was interesting because we had the net selling start to increase. There's more sells than buys on the insiders, but then we did some back testing. We really looked at it, and what we found was that even though there was more selling, the sell orders were pretty small. They were like 12K here, 12K shares here, 165K shares here. It's okay. 8K shares they sold. But when you look at the buy orders, there's actually buy orders that are about 4.5 million, 1.5 million. So even though there is less buying, the actual buy orders that did go through were net positive, right? There was bigger capital increases, you could say, influx, even though there was more sell orders, if that makes sense. Pretty interesting. Thought that was really interesting. So basically, it's like on the surface appears bearish, but when you dig into the net outcome, it actually looks fairly bullish. Strange, but hopefully that makes sense. When looking at Applied Digital right now from a perspective of projections here using Prophecy AI, you do have the 1 hour or maybe market opens starting next week with a little bit of a correction anticipated. Some of the macro may play a role there. If we go into the next week, it looks bullish. Into the next 6 months, it looks bullish. And then into the next year, look at that, $57 price point. That's a 52% projection for APLD. So once again, while you could see some pullbacks in the near term, maybe you get a big pullback. We'll see if the AIs change tune. And we might see pullbacks here down to this EMA, even down to 33. It's a 4 to 10% potential pullback down here. But even so, you got targets of over $50 a share into the next year to all-time highs, which would indicate, once again, like these are 50% plus returns potentially for the data center market. And it's not just from the hype. In fact, it's not really technically favorable when you look at the charts. It's more based on the fundamentals of the financials and the spending that's going on with APLD, and also just the net buying from top tech companies. So when it comes down to the risk and when we like to trade them, there are a lot of short-term opportunities because we've been following it day in, day out, like for months now, including a lot of other ones. It's just allowed us to be able to see the patterns, right? When you get into a trend like this, where it goes on for, let's say 3 months, and you really look down to, the 1 hour, and you kind of look at this very consistent trend. This is a good example. and the data center markets really start to get into a trend, it kind of looks like something like this, right? You get this like really consistent trend, and some of those market open dips, or even end of day push-ups before a sell down at market open, act as really good opportunities. And we actually were able to catch one last week. We bought down here around 33 bucks a share um, at market open, and it surged there with a lot higher profit margins than risk. And we ended up walking away off a $5,000 investment. We walked away with about $1,200. So pretty exciting stuff in APLD, and I'm glad we're able to trade it short term. If you guys ever want to tune on into our daily live trading sessions, it's going to be the second link in the description. If you want to get access and use AI and get our daily live trading, once again, you would be doing yourself a disservice not to go understand how AI can help you get faster analysis on these companies. You guys kind of see what we go through: financials, news, technicals, and everything else. We've automated that process for you, and you can get the full breakdown on it. I'll leave it in the chat once again if you guys need that link. I think it's still there. I'll drop it in the chat. Yeah, there it is. If you want to go watch that video, I would encourage you to. All right, so let's see. Planning to hold and build on that position with Redwire? You got it. So Lee, let's take a look at this one. It's going to be Redwire. So for Redwire, they've seen a lot of bullish momentum here in the space tech market. We got time for one more here. So I'm going to take a look at this one. So for Redwire, when I first met their team, I thought they were a really great company. That's why we actually bought into them. I read some reviews on Glassdoor that people don't like working there, though. It's kind of interesting. But their financials looked really good. So it's kind of some mixed signals. Like maybe their team culture is iffy. Thought that was something, could be, it's not a red flag, but something to pay attention to. But anyway, we saw them go down to $4 a share, way oversold compared to their financials, how things were looking. They recently jumped about 175%. So these types of trades now, like we were able to catch quite a few back in December when we had that big dip and everybody was freaking out before the end of the year and tax harvesting was kicking in. And I think what's key, and this is what's happening with Redwire, is realize like at this moment, RSI MACD looks overbought. Everything looks kind of overbought now with Redwire. And so any short-term trades, you got to exercise caution. The long-term trades, you have, and even medium-term trades, you do have a pretty strong support line here. You got this previous resistance level, previous resistance here, once again, right there around 12 bucks a share. So they recently just broke above 12 bucks a share. You can see this trend. They really broke out. And, as of recently, they're now potentially going to use this $12 level, this previous resistance, as a support. So this is really key. So anytime you're watching an uptrend, so we could kind of take this trend. Here's an uptrend, right? Started here. Previous resistance level acting as support, right? So you got a previous resistance. This is always going to be how uptrends look. You got previous resistance level here acting as support here. It's kind of the validation level. Previous resistance here acting as support here. It's kind of that level where they kind of validate, right? You're going to see that time and time again where these uptrends take place like this. Now, that would be a really hyper bullish outlook here, Lee, that they hold above 12, because you're using this is pretty hyper bullish. Like they're going to just keep stair stepping up, and we see them kind of rocket straight up. I think what might be more likely to happen with Redwire would be something like this, right? So you got a trend like this, and you got a trend. This is the technical side once again, like this, right? So you're kind of looking at this level. It might hold. That's a hyperbull case. $12 support. It continues to run up. But what might be more likely, again, just watch that $12 level. If it holds, excellent. That might be a really great trade. You see it pop more. It's up 17% to just pop out of this conservative trend and continue further. But if they don't hold $12, they might sell down as low as $10.50 right back down here. And that would be fine. It's quite conservative and healthy for them to pull back in this trend that they're in. And then when we look at the short term, that's how it looks. Longer term, I think that they got a $15 target. I think that we could see them get back up into levels that we saw earlier this year. So right up into here, that'd be about a 30 to 50% increase. That's what I would say in the long term. We're talking, next 3 months to year, depending on how investors view the stock and how they continue to trend. But on their current trajectory, it's kind of looking like, we might see those levels potentially into the next month or so if they really continue to ramp up. But I think longer term, you're probably going to see something more more conservative. Just watch that $12 price point. Because here's the deal: when they first started, they were at $500 million market cap or what have you, and they were way undervalued because their assets were so much smaller, right? And we know that they signed some deals. So Redwire, they've acquired some companies, some defense tech companies. In that instance, they also were part of this $2.6 billion deal with NASA, and they became one of 14 prime contractors in this deal. So that's really big for them, right? If you just distribute it evenly, the 2.6, they might possibly come in with $200 million or somewhere around there. And so in their last quarter, when they came in with revenue, they jumped up to 100 million. They're one of the only space tech companies that is doing those types of numbers. They're just a little bit behind Rocket Lab, who's at like 150 or 200 or something. And so they came in with a revenue increase. Balance sheet looks good. They got over $1 billion in equity. But now their market cap's doubled. They're now up to $2 billion. It's a $2 billion market cap. Now we're getting into some uncharted territory. And so I think in the near term, you're going to see a lot of volatility. You might see this get rejected, sell back down, 10 to 20 to 30% swings potentially up and down, which is great for the shorter term traders that manage risk, but can be a little nerve wracking on those longer term investors if you're not disciplined. When it comes down to the getting out of this level and pushing up, and if they can climb up to $20 a share, it's quite possible, right? You're looking at those levels of 90% gain. But I think it would take a long time. So finally, Lee, projections into next year, you're looking at about a 32% increase potential. This is just based on all the analysis along with Grok when using Prophecy AI. And you can see it's a 32% gain. So stabilizing into 2026, around $16 a share. How are things looking? You got some green, a little bit of volatility, a little bit of red into this next week here. But general consensus is see how things are looking. Yeah, $12.50, $13 price point is going to be their, or $12 support is their nearest level. Yeah, so watch that $12 support. Once again, you kind of see the AI is pointing that out as well. $12, $11.67. But overall, in the longer term, looking pretty bullish with some volatility here in the near term. A little bit of a red there. So yeah, I hold the company long term. I'll continue to do so, but in the short term, just watch out. They did surge last week, so be ready for some volatility. Hopefully that's helpful for you and put you in a better position to be able to get a good view, I guess, when it comes to the where we're kind of shoveling out of the analysis for using the AI. Really key factor that I've been noticing macro right now is the AI boom. There's so much demand that a lot of the revenue that's coming in, it's like poor. It's just the revenue is basically dumping on the heads of these AI companies. And the beauty of it is that it's in a position where you see it dump, and then you're like, it doesn't get reported until way later, which is great because the revenue comes in. It's like, oh, they had this deal, and then it doesn't show up on the earnings, but you knew way before, and then the earnings hit, and then masses are like, whoa, and they all realize how big it actually is. And so that's something that is a key thing that's been happening in the AI market. And so just realize that's on the macro, and just pay attention to those types of situations. We see a lot of situations like that. We've been covering them here. We've been covering them on the channel. Make sure to subscribe if you guys enjoy. If you do want to get more AI tools and you want to capitalize on those things, once again, I got the link in the chat and in the first link in the description, so you can optimize your portfolio and get analysis to grow faster. And if you'd like to join us at Market Open for our live trading sessions, StockMate is the second link below. So you get the community, you get the resources. If you need access to me, ask me questions, need the targets for the week, or you just want to tune on in, we're there every day, Monday through Friday, live at Market Open. It's not here on YouTube. It's a separate link. It's a private link that you get an email for about 15 minutes before the market opens. And I would love to see you there as soon as Monday. So once again, appreciate you all. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you guys in the next video.